All right, good afternoon. This is Ifan from the Strategic Day Trader, and this is your market wrap for March 5th, 2019. All right, we just got the close in here. It looks like Qs are going to be more or less flat, and then the SPY down just barely, 34 cents there, it looks like. So coming into today, we had a neutral bias with the potential to start a bearish bias if we trigger this hourly sell setup. Okay, if we trigger this hourly sell setup and then we break over it, then we will be bullish. Okay, so we want to make sure we have a complete scenario here, right? We're coming in neutral. What would it take for us to be bullish? What would it take for us to be bearish? So the first thing that did happen was this did trigger the hourly sell setup, and then the hourly sell setup failed. Okay, so you can see it there on the SPY, broke above it, and then on the Qs, a little bit more strength and a little bit more clear that this sell setup failed. So back to bullish. We saw this break yesterday, found it very interesting, reason enough to shift from bullish to neutral. Okay, and coming into tomorrow, I said if you want to be coming into today, I said aggressive bearish is here, right? If the bears are going to step up, this is going to be their first chance. I would much prefer to see us get through the lows there, and then we're actually talking about some kind of break on the daily chart here. Let's go up to today underneath this tail here, right? 177.75 until we actually damage this Q's uptrend. So again, as we have in the past, aggressive short entries are not getting follow through, at least on the hourly, right? Or daily, weekly, you take your pick. The market's grinding higher. And really, we're recovering from all these potentially bearish early patterns. So there was an attempt there. It got rejected. Bulls stepped up. Now, not a lot happened. So we don't want to read too much into today's doji bar, inside bar on the Qs and SPY. But I have to acknowledge that this hourly sell setup, right, failed. And so we are looking higher going into tomorrow. Okay, so we had something similar happen here, right? We broke the hourly uptrend. That's going to be our first sign that maybe the daily's ready to roll over, and it recovered. Okay, so that is just how we want to follow the trend. So we shifted to neutral, back to bullish. Shifted to neutral, now back to bullish again, right? And you've seen that quite throughout this uptrend, right? While it may be more exciting or attention grabbing to say, oh, we're going to fall apart and, you know, the huge sell-off is coming, everybody get ready. I've been hearing that since January. And I guess, you know, while maybe there's some odds and maybe this was unlikely, you know, I think the thing is with that is that you can get a lot of people hurt with that. And so with the way that we approach it, we want to make sure that we have a complete game plan so that even if we're wrong, right, that we're not blowing up our account, right? So, you know, that's why when we go over the plays, and we'll go over the plays in a little bit, right, they have a stop, right? If I thought every play, there was no chance of it not working, right, then I wouldn't need a stop and I would just, you know, bet the whole account on it. But we acknowledge that there is always going to be the possibility the play doesn't work. Patterns fail all the time, right? So, and sometimes we use failure patterns as a means of an entry, as a means of a continuation or initiation of a bias. So in this case, hourly sell setup failed, so back to bullish bias, right? So we know that this gives us a pattern. It basically just says that we got the sell-off, right? We got the retracement. Bears had another chance to give it another try and see if we could either retest the lows, get going, and they couldn't get much follow through. Okay, so then we just, you know, interpret that as the negation of a bearish event becomes bullish. Okay, all right. So going into tomorrow, more bullish than bearish, probably neutral to bullish is where we should be. What I've been looking for on this daily, the more that we stay sideways, the more bullish. So it looks like that's actually what is setting up, is that the more that we stay sideways, right, giving the market a chance to rest, doesn't get too extended away, and then this kind of back and forth gives a chance for bears to get in, have to cover their positions once they're proven wrong. So that keeps the demand in the uptrend going, right, along with people coming late to the trend, looking to get in so they don't miss the next move up. Okay, so that's what we've got. I think we've done a pretty good job staying on the right side of this uptrend as it's been grinding higher and not fighting the market. So, you know, we'll just continue to follow the trend as simply as it gives it to us. Okay. All right, so let's go over first the CTRP. Now, these kind of came at the same time, the CTRP and CN. And I was kind of annoyed because the CN went first, and I wasn't able to be a part of it. But I'll go over the CTRP, and part of the reason I missed the CN was because I wanted to make sure that we got this out as an official call in time there. Okay, so we'll go over first the gap here on the C-trip. Was a gap up, clearing some resistance there to the left, clearing the 200 on the daily. Usually that is a bullish sign. If you go from one side of the 200 from below to above it, that usually gets followed through to the upside. If you go from above it to below it, that usually gets followed through to the downside. It's not that the line is magical. The 200 is a good approximation over for the last 50 weeks of trading. So about a year, an average of the last year's trading or so is about 250 trading days in a year. This is a 200 daily moving average. So, you know, it's a pretty good approximation of where it's been trading over the last year. So, you know, but usually the 200 does get follow through when you gap from one side to the other, and clearing the resistance here to the left. So wanted to see follow through on the CTRP. So that was a pro gap, definitely wasn't a novice gap. So we want to be playing in the direction of the gap. Okay. And we came in initially after it rallied, you can see it rallied here and then immediately got rejected and actually made new lows. We set up this base here and then we got the initial pop. Now this was a low of the day base. I consider these kind of aggressive because we've actually sold into new lows, and while we've been basing here, I want to see some kind of reaction after the first move up. Okay, so once we got this neutral bar here, then I thought we were good to play. So the high of this candle was 40.13 over 40.15 with a stop at 39.50. Okay, so that's the pattern. It's basically a breakout, but we waited for a secondary entry. I'll show you the WRE yesterday. And the reason I wait for that secondary entry is because I want to make sure that it's not going to be a breakout failure, right? Look at this WRE basing at the lows, breaks out, and then what? Inside bar, and then, right, proceeds to sell off. So on the C-trip, because it is a bit of an aggressive entry coming off of the lows here, I want to make sure that we don't get sucked into a breakout failure. Okay, so we see the breakout and then the breakout holds. Okay, so we were able to play the C-trip long. Okay, and once we based at the highs, I said let's look for the 11:15 reversal time as the target because we look at the daily, right? It's hard to pick precise exit levels, you know, or know exactly what the top is, right? So I was looking for 11:15 reversal time. I got a little bit impatient, I think, on this. Our entry was 40.15, and once we got to 41.50, yeah, once we got to 41.50, I was starting to look to trail, even though I knew I wanted to wait for at least the next major reversal time. Just to try and stick with it. As we were breaking out here, I did get a question. It's like, oh, can I trail? Can I do something with this? And I, you know, said, I'm trying to let it play out as much as possible because we got this base here at the highs. That helps load up the move a bit. You know, it's not getting extended, right? It's basing up at the highs, dealing with resistance and ready to break out. So we did get half out under 41. 35, and then the other piece came out under 41.40, and then the high of the day ended up being 43 to the penny. I know some people were kind of looking for a short on this, and I think that actually worked well. Some people played this rollover off the highs. You know, that's not my play. Like when I go to review charts at the end of the day and I see, okay, this had a gap up and I see this kind of bar, to me, the easier way to make money on this is to the upside, right? When I see this, especially if I see, okay, this is what the 15-minute chart. Now, I know some people are super fast and super precise with scalping, right? And so, you know, they can, you know, scalp it and then get it, you know, near the lows. And then if it pops right, they're already out and they don't, you know, end up with a break even or even a loss. Like someone could maybe even look at this KSS and say, yeah, I shorted it right here and made money. Well, for me, that's going to probably be too small of a initial move. I'll probably be waiting for more. You know, I do shoot for at least 2 to 1 as far as risk to reward. And then, you know, that ended up not working. So I know that these kind of like fading the move or in counter trend plays, they just don't work with my management style. Even if, you know, I can say, oh yeah, this drop was good or this drop was good. You know, I know that it's not going to be enough for me to feel like it was a nice enough move or rewarded enough. So that's why, you know, I am looking for these kind of moves, right? Okay, so I'm glad to see C-Trip worked. I think a good amount of people took it, so that's always great to see as well on the C-Trip. I think there's plenty of time to get in, and there was also an ad over the high of the day that I think some people played as well. You could have played it if you didn't get in on the entry that I put out. You could have played it as a breakout right here, just a breakout over the highs. Okay, and then still been a part of the nicer part of the rally there. So that was the C-Trip call. And so the other one that was triggering right at the same time was this CIEN. Now this is the gap berry strategy. We developed this strategy in 2017. Yeah, end of the second half of 2017, and then featured it heavily last year and the gap berry. And so now it's kind of become kind of a common strategy for everyone to play. So that's really good. You can see like the triple D we talked about right on Friday was also a gap berry. So they gap up, they clear resistance, and then get rejected, and then actually clear through support. So once they get through support, then you look for a retracement or a base, and then you play the retracement and the breakdown. Now, the CN gave us both. So the CN came in, broke the support, and then here's your retracement. See this right here? Sell setup. Low, higher, low, higher, low, higher, low. Then once it breaks the previous higher low, and then you're in, you got a, let's say 35 cent stop. Probably a little bit, you probably widen that a bit just because the CN can trade with a little bit of spread. And so then first you got this sell setup. Okay, triggers right there. And then you actually got a breakdown. So this is the one that Sammy gave to the room right at just underneath this base as a breakdown. So that got going, and that was pretty good. I haven't calculated the max move on this, but definitely if the C-Trip had not worked, I would have felt worse about missing this. But either way, this really should have been played. I just didn't get to it in time. I was trying to put the C-Trip in, put in the targets and everything to make sure that we got it. But that's okay. It's okay. I think, you know, missing plays, we had a good discussion here at the end of the day. I think someone saying how they had missed the CRON breakout and they hadn't seen it in time. And, you know, it's just going to happen. I think those we just have to get over. And I know the kind of pain of missing out this breakout right here, again, a high of the day base, kind of like how the C-Trip set up. Those are kind of always tough to get over. And so it's just what's going to happen, especially if you do a lot of scanning, which I know he does a lot of scanning. The person I was talking to missed the CRON breakout. Okay, so you know, overall, I thought it was a good day if you participated. Maybe not overly busy. I thought, especially after the morning, things were a little bit quieter, but you know, if you trade something different, transitions or something maybe or climbos, maybe a busier afternoon, didn't really see much to do. Really just did this C trip. And then there were some kind of other plays here and there. But, you know, when the market's not moving much and it's pretty much range bound, which is what we had today, you can see it from the daily, especially here, then the ones that are showing a lot of weakness or a lot of strength stand out. So like something like this CN, right, should be able to get your attention right away. That, okay, now we already broke through yesterday's low. Okay, can we find a way in and participate in this move? Okay, and I think even in the afternoon, actually this one, yeah. So here's another one. This one, the CN, is just a 15-minute breakdown inside of an hourly sell setup. So that was fine too. I don't think that was a huge play, but it worked, I think, well enough that would have been decently profitable. So yeah, I don't think there was a lot this afternoon, but you know, that probably will be the case and just the adjustment we have to make over the next few weeks until we get into the April earnings season, because usually March gets a little bit slower. All right, so if afternoons slow down, I think that's okay. Just got to make sure we're ready to go at the open to capture whatever nice moves we can. And I thought the C trip I thought was about as good as we could have done today. So it's always good, right? So, all right, we will see what we get tomorrow. Going into tomorrow, neutral to bullish still. This, you know, looking like yesterday served to maybe just shake out some longs, maybe trap some shorts, but so far it's not giving follow through. So what would it take for us to lose the bullish bias and go to a bearish bias? I think first we'd have to see a break of 172.40 on the Qs, and that'll make me lose my bullish bias, okay, under 276.80. And then to go bearish, we'd need to see SPY already broke, so that would be the same on the SPY, basically underneath yesterday's low. And then on the Qs, we need a little bit further under 170, 175. Okay? Otherwise, we'll be neutral bullish going into tomorrow until either of those support levels break. Okay? All right. Have a great evening. We will be back at it tomorrow. Good night, everyone.